So you're suggesting that B should be able to compete in every market you just listed? Yes, definitely, definitely. Due to China. The most competitive market is the Chinese one. Why not, if you emerge victorious in the fiercest market? In other markets, you cannot succeed. Look, I don't think that BYD and Tesla's current position as leaders in China actually lessens what Tesla has accomplished. I mean, I believe that this was a record quarter for Tesla in China, and we'll find out in the coming weeks. Imagine a future in which the two leading manufacturers of electric cars collaborate. Doesn't that seem like something from a science fiction book? But buckle up, because this incredible scene may be closer than you think. While the two titans have been fighting for years to dominate the EV industry, there are indications that their icy relationship may be starting to warm up. Now enter Tesla and its fierce competitor, BYD. The first sign of a possible change in the industry was in 2022, when Tesla started using BYD's LFP batteries in some of its German-built Model Y vehicles. This was an unexpected move considering their long history of bitter rivalry. This preliminary cooperation suggests that both sides may be beginning to recognize the benefits of collaborating. But how would this partnership help both businesses in the long run and impact Tesla's stock price and valuation? Let's investigate these options. Make sure to click the like and subscribe buttons first, though. Let's get going now. A BYD representative acknowledged in an interview that the U.S. market is complicated and that this is why they are hesitant to enter it. They emphasized the ambiguity around customer choices, charging infrastructure, and policies. The spokesman stressed that businesses in China must invest in electric vehicles or risk falling behind due to the government's evident push in that direction. However, they also pointed out that U.S. policy limitations and intricacies prevent OEMs from embracing EV technology to its full potential. Notwithstanding the difficulties, the spokesman emphasized the significance of fair competition and an open market, two fundamental principles of the U.S. economy. But American automakers are starting to pay attention as China becomes more and more prevalent in places like Mexico. Executives from Stellantis and Ford, as well as prominent figures in the industry like Elon Musk, have voiced worries on the competitive threat posed by Chinese automakers. Do you agree that Chinese businesses might dominate the market and compete fairly in the absence of trade barriers? But there's also another angle to take into account. Consider BYD as an example. Rather than focusing on the local market by crossing borders into the U.S., they have made manufacturing investments in Mexico. Instead of becoming national, their approach is focused on the local consumer base. Let's also take a look at a historical equivalent in the automobile. Do you recall when Japanese brands first appeared on U.S. shelves decades ago? Similar concerns existed before then, yet local companies managed to prosper in the face of international competition. It's possible that worries about Chinese competition in the electric car market are exaggerated. Tesla's profit margins are being squeezed in the interim and might stay that way for a few months. Many investors may be disappointed if Tesla's profitability declines this year, despite the fact that certain bullish emotions persist. How do you feel? Do you still think highly of Tesla? If so, know that you are not alone in feeling that way. You know who else is as optimistic about Tesla as you are? Our pals from Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. The internet's top pro-Tesla news outlet is Seeking Alpha. Get to the facts without listening to the mainstream media's anti-Tesla propaganda. To take advantage of a special discount, click the link in the description. Still, what if Tesla modifies its strategy to increase the value of its stock? What if they choose to join forces with their fiercest competitor, creating a groundbreaking alliance in the EV and car industries? Consider the options. Beyond merely batteries, a partnership between Tesla and BYD might lead the way in breakthroughs in autonomous driving, battery technology, and other vital EV development areas. When combined, they could reduce production costs and increase the number of people who can afford EVs. This united effort might accelerate the transition away from gas-powered vehicles and secure their dominance in the EV industry. Let's go on to the main point, though. What effect would this partnership have on Tesla's stock price and valuation? A strategic alliance with BYD has significant potential benefits, even though success is not a given. An alliance of this kind would boost investor faith in Tesla's long-term goals and capacity to rule the electric vehicle market. This optimistic view may raise the price of Tesla shares. Additionally, the partnership may result in faster growth and a larger market share, securing Tesla's place as the frontrunner in the EV revolution and possibly raising its worth. Of course, obstacles could include resistance from within both businesses, as well as the difficulty of finding the ideal balance between cooperation and rivalry. But a well-thought-out alliance might revolutionize the electric vehicle market, helping BYD and Tesla alike while hastening the world's shift to more environmentally friendly modes of transportation. Who knows? Tesla's stock price may even have a happy ending as a result of it. In other news, the leading electric vehicle manufacturer, BYD, has just debuted the U9, an ultra-luxury sports car under the Yang Wang brand that will set you back a hefty $233,000 in China. This most recent model demonstrates BYD's competitive approach across the board, which helped it overtake Tesla as the biggest electric vehicle manufacturer last year. I had the chance to have a conversation with Stella Li, the executive vice president and CEO of BYD America, about the company's development and its goals for markets outside of China. Li claims that BYD observes comparable EV adoption trends in nations like Brazil, Thailand, and Israel, which are consistent with China's 10-year trajectory. Li emphasized that BYD's performance in China's extremely competitive market is encouraging for the company's international development and expressed confidence in the company's ability to compete in these countries. She also emphasized BYD's emphasis on innovation, which positions the business as a leader in technology, in addition to providing chic and contemporary designs. In terms of growth, Li disclosed intentions to establish production plants in Thailand and Hungary, with work already underway in Brazil. In order to serve the Mexican market, BYD intends to disclose its intentions for a facility in Mexico in the second half of this year, with a focus on the south or central region. Even though Tesla's stock has recently dropped, some investors still believe there is a chance to fund the company's wider technological endeavors than just electric vehicles, especially considering how much the stock is now worth compared to a few years ago. But not every expert is as upbeat as this one. According to Mark Cotton, an investment director at JAM Investments, there are a number of obstacles that could prevent Tesla's stock from reaching $300 once more, such as potential declines in demand and price cuts. Tesla's impressive profit margins, which are a reflection of its operational efficiency, set it apart from its competitors in the automotive industry. The business generated $81.5 billion in revenue in total in 2022, with an operating profit of $13.7 billion, or a healthy 16.8% margin. This is in sharp contrast to U.S. competitors such as Ford and General Motors, who usually function on a single, upcoming generation of vehicles by 50%. Even if the price of Tesla's stock has fluctuated, it is important to recognize that the company is still recovering and that there may be more gains ahead. Even if Tesla's margin advantage worries some analysts, the company's pursuit of a mass market strategy might end up being more profitable in the long term. For investors, holding on to their optimism on Tesla's trajectory might result in substantial gains. Regarding the prospect of a collaboration between BYD and Tesla, the advantages seem quite attractive. This concludes the video. Please remember to subscribe to and like our channel. Welcome back to Tesla Stock News. We hope to see you in our upcoming videos.